We were delighted to host our seminar today entitled Winds of Change, in which we looked at some of the headwinds and some of the tailwinds affecting the global M&A industry and the marketplace, of course, here in the UK as well.
We're currently seeing unprecedented levels of disruptive M&A. In 2018, $217 billion worth of transactions where traditional business models are buying disruptive digital technologies. Here in Yorkshire in the North East, that's fintech, it's health tech, it's ed tech. I think what you need is businesses, stakeholders, really thinking about strategic direction, really thinking about the execution of the deal, and then how to integrate fully to get value.
Activist investors buy minority shareholdings in listed businesses that they believe are undervalued. In 2018, worldwide funds deployed by activists were $75 billion, which is triple the value from 4 years prior. We've seen these US funds increasingly spread worldwide, and in particular to the UK, along with attracting new local market entrants.
We are seeing far more activity with large corporates and PLCs disposing of non-core assets. I think in times of uncertainty, they've got to focus on their core operations, and that brings opportunities for houses like Endless, with a long track record of investing in these types of businesses, to acquire them.
The tailwind I've been talking about today is the continued growth and importance of the global private equity industry. And one factor in that growth is the very large amounts of capital available. We call it dry capital available. As at the end of 2018, that was $1.1 trillion globally. There's no question to us that's going to continue to drive private equity, which is a really important part of the global M&A industry.
So thinking about the future of the deal from a debt perspective, I can boil it down to 3 key points. Firstly, thinking about tailwinds, we think the oversupply of debt in the market is going to continue as the banks are better capitalised than they've been before, and credit funds have raised committed capital that needs to be deployed in the market. Secondly, thinking about headwinds, we expect economic uncertainty and volatility to be a feature going forward, and we think this is going to drive an increased level of scrutiny from lenders as they assess credit quality. And thirdly, following on from that, we think this requirement to assess credit quality in a more scrutinised basis is going to lead to increased investment in technology from lenders to help support lenders as they assess that credit risk.
Unquestionably, there are some headwinds that we need to address, and the market needs to think and plan for as we look forward in the coming months.
With the growth of the disruption in the market, as we as an industry need to grow, respond to this rapid pace of change, we need to work smarter with our clients, debt advisors, partners, as well as the fintechs, to be able to adapt to this change.
But by the same token, some very, very strong tailwinds. We looked at the role of private equity, the role of debt markets, the role of shareholder activism, and the role of disruptive M&A, together which we think will continue to drive the growth and sustainability of the M&A marketplace.